I'm Dan Fitzpatrick at realmoney.com. Every night we watch the same shows, Fast Money and Mad Money, and we want to use those ideas to grow our money. Well, good trading takes more than just writing down the tickers you see on TV every night and punching the buy button the next morning. I can help you know when to buy these 3 stocks I saw on TV. Today, let's look at Berkshire Hathaway, Kimco Realty, and Apple. Last night on Mad Money, Kramer was talking about Berkshire Hathaway. Obviously, it's the Buffett deal. He thinks that Warren Buffett's a wizard and, you know, et cetera, et cetera. I can't disagree with Jim, but let's just look at the chart. The stock had been trading up pretty nicely up until this point, and then it started rolling over. So where are we right now? Well, if this was the uptrend, that little flag or little triangle there, this is the downtrend. Now we're in this sideways consolidation. That's really what we have going here. So let's look here. Daily chart. This is what we got. You got a support level, rising support level right here. Flat resistance level right here. This stock is right at resistance. Now here's the thing. I want you to wait to buy this thing. And here's why. If the market rolls over, Berkshire Hathaway is so widely diversified that it's probably going to roll over as well, give you a better opportunity to buy down here. If the market continues to move strongly, though, Berkshire Hathaway is going to break out. You're not going to be giving up that much by waiting a little bit, waiting for the breakout. But on the other hand, if you buy too soon, you just may be giving up some in terms of price or cost basis because you could have got it lower. So just stand tight, just sit tight, let this thing either pull back here or move up just a little bit and buy it. But right now I think this is a watch closely, do nothing stock. Now, Kimco. Kramer was talking to the CEO last night, and he thinks that this stock is another one that's likely going to move higher. Here's your resistance right here. Weekly chart gives you a sense of what's happening though. It's actually was 2011, not too shabby up until about mid-year. Now the stock is struggling though. So this is one, you can look a little bit at the dividend, 4%, which ain't too bad, but not if you're buying it at the top. We've got resistance right there. We've also got resistance up here. Here's what I want you to do though. If you buy Jim's thesis that this stock is going higher, use this as a basis or just basically as a reference point for support. Any move up above this level puts this thing in the buy zone. But frankly, any kind of a pullback, and you probably get it at some point in the next couple weeks. We should get some kind of a weak market. Please, Lord, let me in. You should get a little bit of a pullback if you can buy it closer to 18. You know what? That totally works. And last and certainly not least is Apple. Last night on Fast Money at the end of the show, Karen Feinerman said, look, if you got profits, you know, you really kind of need to take them. It's time to exercise some discipline. I completely agree with her there. Look at this. It's a structure that I create on my charts. Third standard deviation. This stock is almost up 3 standard deviations above the 20-period moving average here, the 20-day moving average. So this is moving really, really strongly. Stocks just don't continue to move like that for very long before they ultimately pull back. Nothing wrong with Apple. I love it. I own a slug of it, but I'm probably going to be taking profits today because that's what you do when a stock is run up so far, so fast. You go ahead and ring the cash register. Don't sell it all. Please don't sell it all, but sell some. Take some of those profits and then grind it back into the stock if Apple does pull back, even if only for a day or two. If you haven't done it already, go do it now. Get over to Real Money Pro and subscribe, okay? It's a new service. It's an awesome service. Lots of good trading ideas. Some of the best are in my articles, Fitbits. 5 charts in each article, 4 articles a week. What's that amount to? You do the math. It's about 80 charts a month. You've got to be able to find a good trade in there somewhere. So get over there and check that out. Also, go over to my website, that's stockmarketmentor.com. Sign up for my email list. It's totally free, and I will send you 1 video a day with a charting idea that's designed to do 2 things. First of all, teach you how to fish for yourself. Second of all, maybe toss a fish on your hook every once in a while. Okay, I'm Dan Fitzpatrick, and I'll see you next time.